Hello and welcome. You're watching India Market Close here on NDTV Profit. We'll dissect key market trends and set the stage for what's been a very solid week and possibly a very interesting coming week as well. I am Hersh Sayta. With me is Mahima Vachharajani. We're trading in a very tight band. Let's pull up the intraday chart. We've been trading in nearly a 60-point band through the day. Very tight. And the good part is we've been above the all-time high yesterday's peak all-time high pretty much all through the day today. That's what's really stood out for me. We're 1/3% higher on the Nifty 50, as you can well see. In terms of the contributors, there's been a lot of chop and change with regard to contributors. Reliance, which was on the other side, has moved to the red side. We've seen HDFC Bank move lower down on the pecking order, but continues to trade in the green. But the top contributors, Bharti, M&M, Bajaj Finance, NTPC. Bajaj Finance, second day in a row. We've seen very solid traction on the stock, 2% plus second day in a row for Bajaj Finance. And that's something that's, playing out very well in a very interesting market otherwise. There's no specific sector visible here that is taking a bulk or claiming a bulk of the gains. We are seeing a fairly diversified set on your screen in terms of contributors. Let's also pull up the top gainers on the Nifty 50 today. Power Grid, Bajaj Finance, NTPC, Cipla, all trading with 1.9 to 2% plus of gains in trade today. So very healthy gains for some of those. Tata Motors, ITC, Reliance, your top losers, with Tata Motors down 1.5%. Can't blame the stock too much because it saw such a steep and solid rally in trade yesterday, and that's likely a bit of either profit booking or bit of cool off which you are seeing on that one. So that's how at least the benchmark is playing out. Let's move to the broader markets. The Nifty mid-cap up 1%, so clear outperformance there versus the benchmark. The small cap also up 0.7 odd percent. So you're seeing good outperformance within the broader markets. Let's pick up the advanced decline, see how that is really playing out. Again, the advanced decline is in favor of the advances, but just by how much? We'll try and pull that out, and there you go. Clearly 1300 to 800 nearly. So the advance is clearly holding up well. In terms of sectors, you're seeing a secular green across the board except the Nifty FMCG, which is trading just about slightly in the red. Call it absolutely flat, if not slightly in the red. The Nifty IT, though, absolutely flat, that one. It's been a very solid performer through the week. The Nifty Bank 0.5% higher. Nifty Auto doing well for itself as well, 1/3%. Mind you, auto sales numbers will come through this weekend, and we'll see a bit of a reaction on some of those auto counters, so keep your eye out on that. The Nifty Pharma has really done well in trade today. Nifty Pharma, Healthcare, Realty, those three indices are essentially what's aiding, at least within sectors, are the rank out performers. But in terms of specific stocks, Mahima, talk to us about which ones are buzzing.
Right, Harsh, to start with, we've been discussing throughout the day about the sugar stocks, and, all of these sugar stocks as well as the distilleries per se are buzzing in trade today. Now, this is after, the no cap on sugar diversion for ethanol news came out. A lot of these stocks like Balrampur Chini, Sri Renuka, EID Parry, Bajaj Hindustan, Dwarikesh Sugar, these are some of the sugar stocks that have been buzzing throughout the day today. Some of the distilleries like Global Spirits, it's locked in upper circuit, 20% on a stock like Global Spirit. There's Praj Industries, there's India Glycols, Radhiko Khaitan, Tilak Nagar. All of these distilleries are also buzzing on the back of the same news. Moving on, RVNL and Patil Engineering are also buzzing in trade today. RVNL on the back of an order win. Plus, the RVNL and Patel Engineering have signed an MOU for hydro and infra projects in India and abroad, and companies will bid jointly and separately for both these projects, and the focus is on high standard and project excellence. So both of these stocks are buzzing in trade today. RVNL up around 5% almost, and Patel Engineering also up around 6%. Next, Jaicorp. Now, surprisingly, a lot of companies, we've been seeing buybacks on a lot of companies after the budget announcement when it comes to the taxation part of buybacks, and stocks have reacted positively, but there's an exception here where Jaicorp is down roughly 6%, and this is after they've announced a buyback at a price of 400, which is at a premium of 2%, and the record date is at 10th September, and promoters holds roughly 74% in the company as of June 24. Moving on, the aviation space has also been in focus today after the Vistara news, the merger news that came out, and of course SpiceJet is in focus. The SpiceJet has placed 150 cabin crew members on a temporary 3-month furlough, and yesterday also the tourists were asked not to step on the Dubai flight as well, which was an exclusive to NDTV Profit. And moreover, DGC has announced increased spot checks as well as night surveillance on the airline to ensure safety overall. So SpiceJet is also in focus, down around 6%. And lastly, Bharti Hexacom is also in focus, Hersh. And this is on the back of Citi initiating coverage with a target price of 1405, which is a 20% upside.
Yes, and what a move by Bharti Hexacom on the back of that today. But let's quickly bring on board Jay Bala from Cash the Chaos. Jay, extremely steady market. I've rarely seen the markets be so steady through the day. What should one make of it, and what should one expect in the week which is coming up?
Hi, Hersh. Good to be here. See, the markets going forward are likely to see very high amount of volatility, probably stomach-churning volatility, but the markets remain bullish, and they're going to be bullish, but you're going to get that bullishness with a heightened amount of volatility, be it the local Indian markets or the global markets. So usually stability precedes volatility, and volatility precedes stability. So it's a cyclical thing. So watch out for it. And the market structure is such that we have something like 5% higher from here, and once that's completed, we could see something like a 18 to 20% drop, and then the markets come back on a medium to long-term basis back to record highs. So that's the kind of short-term volatility as well as medium-term volatility I'm envisaging for the markets.
And Jay, Nifty FMCG is the only one which is kind of in red, and we can say it's flattish, trading flattish, down around 0.1%, which was the top gainer yesterday, in fact. So your view on Nifty FMCG?
I've been bullish on Nifty FMCG for the last couple of months, and they've done, and in fact, FMCG and pharma were my preferred two sectors. And FMCG is running a bit, looking a bit exhausted. Might still have upside somewhere close to 65,000, and I'm still bullish on Dabur and Britannia. As I see them as unfinished move, Dabur have an upside potentials to somewhere about 690, and the main weight is coming from ITC. So still bullish, but it's a bit late in the day for FMCG sector. But be quite cautious. Be ready to lighten up on positions here.
Oh, lighten up on FMCG. Jay Bala, your picks for this afternoon.
Yeah, I'm having one from the mid-cap, small-cap space, and one from the strong sector, pharmaceutical space. IOL chemicals and pharmaceuticals, it's been a laggard, and recently it's put in a base at around 530 and 330, and it's coming back up after being a laggard. And this has potential to scale somewhere about 530 in the short term. But if it were to take out 535, 540, it's a medium to long-term breakout, and it will probably go past the all-time high about 890 and cross 1,000. So that's the reason why I have this as a pick for the short term. And watch out for the 535, 540 level. If my objective of 530 gets exceeded, investors might want to hold on to it for record highs. And the second pick is Autoline. It's having a long-term breakout on the inverse on the monthly charts. It's got a what we call as an inverse head and shoulders breakout. The stop loss is about 120. The initial short-term objective was 240. If that were to get exceeded, I think it's would aim at about the 2008 high, about 400 plus. So both have medium-term trajectory as well as short-term trajectory. So I'm going with the direction of the medium to long-term trajectory.
Right. Okay. The focus also remains in the telecom space, and the Supreme Court of India is set to hear curative petitions filed by major telecom players, including Vodafone Idea, Bharti Airtel, later today. Now, these telecom giants are seeking a limited reconsideration of the court's 2019 judgment that required them to include non-core revenues in the calculation of their adjusted gross revenue or AGR dues. My colleague Rucha joins in with more details.
Thank you. So the telecom buzz is around the AGR dues case. Now, telecom companies had filed a petition against the Supreme Court to deny the Department of Telecommunications for including the non-telecom revenue as well for calculating the AGR dues. Now, AGR dues are a sum of money which telecom companies have to pay to the Department of Telecommunications, and Department of Telecommunications believe that the total revenue, telecom as well as the non-telecom revenue, should be included to calculate these dues, but telecom companies state that only telecom revenue should be included to calculate these AGR dues. Hence, they had also filed a petition against Supreme Court. Now, this petition was to be taken up today by the Supreme Court, but the Supreme Court refused to entertain the request. Now, the matter will be taken up in CJI's chambers, which was set to happen at 1:30 p.m. today. There's no update about it till now. So, this is the latest news why the telecom sectors are buzzing in trade today because of the AGR dues case.
Right, but there's plenty of other reasons as well. Amid all of those, let me first, Rucha, bring you on board with regard to Bharti Hexagon. Stock is up 5.5%+ in trade, so you're seeing very strong traction. Citi initiating coverage. Talk us through that one.
So you're right, Hersh. So Bharti Hexacom is buzzing in trade today. This is because Citi has initiated the coverage on the stock with a buy rating and target price of 1405 rupees, implying a 15% upside even after today's rally. So now talking about Bharti Hexacom, this one is a subsidiary of Bharti Airtel, wherein Bharti Airtel owns around 70% in the company and 15% is owned by the government. Now Bharti Hexacom provides services in two circles, Rajasthan and the northeastern circles, under the name of Airtel. Now, according to the brokerage house, Bharti Hexacom enjoys a higher market share gains as compared to Jio in both of these circles, and hence sees an upside potential of around 15%. Talking about the telecom sector view as a whole of Citi, Citi is bullish on the sector, number one, due to possible tariff hikes in the future and also due to the steps taken by India towards 5G monetization. Talking about stock picks, they have given stock picks under two buckets for a 3-month period. They state that they like Indus Towers at a target price of 500, which implies an upside of around 10%, and also Vodafone Idea with a target of 22, implying an upside of 38%. But over a 1-year period, it likes Bharti Airtel with target of 1750 rupees, upside of nearly 10%, and Bharti Hexacom, as I rightly mentioned, with a target of 1405 and upside of 15%. All this even after today's rally.
Well, they've virtually picked everyone in that telecom basket, and they've given it good upsides. But Rucha, the other one is also Bernstein. What are their views?
Right. So Bernstein does not have any coverage on Vodafone Idea till now, but it does have a coverage on Bharti Airtel, and it has an outperform rating and target price at similar levels to Citi at 1740, upside of around 10%. Now it believes that two major players, Jio and Bharti, are doing really well in this space and will continue to gain the market share. Now this one has a contrarian view on Vodafone Idea as compared to what Citi has. Now this Bernstein, this brokerage house, it believes that Vodafone Idea subscriber churn remains high, and this will continue to stay even after the funding raise done by the company. So it believes that the funding raise, etc., that the company has already done will not help Vodafone Idea gain market share as compared to what Bharti and Jio has already had in the market currently.
Right. Thank you so much, Rucha, for giving us the entire comprehensive approach on the telecom space. Jai, I'll come to you. Brokerages are pretty bullish when it comes to the fundamental side of things for telecom stocks. Your view in terms of technical, how does these stocks look like to you on the charts?
Yeah, I've been bullish on Bharti since November of last year at about 900 odds, and it's far exceeded my expectations, and it's still looking bullish. But, they still have upsides in the medium term, but the short term and the medium term for Bharti Airtel looks a bit toppish. So you might want to wait for a pullback to come through, and then once the pullbacks come through, you can turn bullish for the medium term. But when it comes to Bharti Hexacom, it's looking like it's still got short-term upsides, but the only problem there is it's got very limited history. So from a technical perspective, I have chart history only from May of this year. So as far as the stock is trading about 1056, I'll expect the stock to hit about 1440 to 1500. Vodafone Idea, I don't like it much. The stock structure is something that's not attractive to me. Probably it's got upside to work with, but personally I would avoid it. It might still touch somewhere about 18 to 19, but I will still avoid it as the price structure is not very giving that much of comfort.
Okay, avoid Vodafone, but extremely bullish on Bharti Hexacom, Jay. But let me also welcome on board Sudeep Bandyopadhyay from IndiTrade Capital. Welcome, Sudeep. I'm not sure how much of the conversation you heard. We're talking about telecom. There's been quite a few views with regard to telecom come through. Citi, from a short to medium term perspective, seems to like something like an Airtel, Indus Towers, Vodafone. From a more longer term perspective, seems to like Bharti Hexacom. On the other hand, Bernstein constructive more on Jio and Airtel, the top two, and believe that market share will consolidate more towards those larger players. In fact, when I read the report, 50 crore plus users is what it expects Jio to clock very, very soon and have a 50% market share of the telecom market, as well as ARPU is getting better towards 270, 280. Sudeep, your views on telecom, both from a fundamental market share perspective, specific names, as well as valuations?
Well, Harsh, a couple of things. I think, as far as Jio is concerned, yesterday I was listening to the chairman's speech at the AGM, and the kind of plan they're outlining for the overall Jio platforms business. I think it's quite amazing. It does cover multiple aspects, including the introduction of AI in a big way, providing, storage, 100 gigawatt of storage free, and things like that, which they're planning to launch in the near future. Plus, I would also say that the Reliance Disney merger, as far as the content part is concerned, they are going to be big on content. So I think Jio Platforms is getting into a different league altogether, and they already have close to 49 crore customers. So 50 crore, I don't think is a big deal as things stand today. So Jio, of course, is going to be a formidable player. How formidable? What kind of lead they will have on other players and things like that needs to be explored and examined over a period of time. But definitely they are going to be a formidable player. Fundamentally, I like Reliance based on what they are already doing and what they're planning to do. As far as the new energy business is concerned, retail is concerned, and Jio Platform is concerned. Of course, they are not letting go the focus on traditional businesses as well. So Reliance is a buy, even at current level, from a long-term investor point of view, and that includes the Jio Telecom. But leaving aside Jio and Reliance, I think I like Bharti Hexacom. I think it's a pure play telecom play. They are in a dominant position in both the markets where they are, which is Rajasthan and Northeast. I think the potential of the company to improve performance with ARPUs going up is significant. So it's a no-brainer. I think Bharti Hexacom is a good bet. Pure play telecom company. Airtel, on the other hand, of course, I think they have done commendably well in spite of competition from Jio. They have improved market share, of course, at the cost of Vodafone Idea. And their global business, African business, which was a bit wobbly earlier, has now stabilized. So considering all this, I think from a long-term perspective, even Airtel does look good with ARPUs going up. Voda Idea, on the other hand, I think there are a lot of question marks even now. They have to improve operationally significantly. Bit of problem on the fundraising side have been resolved at this stage. They still have a long way to go, but I think the operational challenges need to be resolved. They're losing customers month on month, and that they need to stem that rot very, very quickly. Otherwise, the platform will lose its charm. So as things stand today, Voda Idea, I will be watching. Indus Tower, of course, it's a play on the other telecom players doing well, and the telecom density increasing, 5G penetration increasing, and things like that. So Indus Tower, again, from a long-term point of view, there's absolutely no problem. Overall, on the telecom space, we are positive. Voda Idea is something which we'll have to be careful about.
Right. So Voda Idea is something that one must be careful about. Otherwise, telecom space looks, there's a bullish view on the telecom space. Well, another stock that is buzzing in trade today is Prestige Estates. The realty major rose over 5% on the launch of its 5,000 crore QIP launch. Anushi brings us more details. Anushi?
Hey Mahima, so as you said, Prestige Estates is in focus, and this is after its floor price came up. Floor price of its QIP number came out, which is at about 1,755.09 per share, which represents about 1.8% of a premium if we compare it to yesterday's levels. Now, the company has also mentioned that it may offer up to not more than 5% of discount on its floor price number that we are looking at. Do note that the company had in June mentioned that it plans to launch about 5,000 crore through the QIP road over here, and the proceeds are going to be used for some part of it going to be used for the repayment and prepayment of certain of their borrowings, along with that certain growth opportunities in which they are seeing more land development as well. So they're considering that as well. Other than that, if you just go back to see how the company had performed in their Q1 FY25, it was not such an exciting quarter per se. Again, this was also on the back of a very strong base of Q1 FY24 which took place. So some of the numbers, to just reiterate on that, bookings are down about 23% this at about 3,000 crore. Now this was due to the lack of launches which took place in this quarter, due to the election season also being one of the factors as mentioned by the company. Company had launched about 1.9 million square feet as compared to 3.1 million square feet in Q1 FY24. Total collections though rose by about 6% at 2,900 crore. Now coming to the management outlook on how he continues to retain the 20 to 25% of a growth guidance in terms of bookings. And on the debt number that we are looking at, it would be interesting to see how with the QIP number, the debt number would go down up to, because if we look at the current debt, that rose to about 8,200 crores. So there has been a slight inch up in the debt levels that we are currently looking at. Moving focus to the analyst recommendation side, over 16 buy calls on this one, while 3 have a sell rating. And the implied return for this comes up to about 12.6%. Now, this is according to what Bloomberg has been showing on the analyst coverage side. So, Prestige Estates in focus after its floor price got approved in its today's meet.
Right. Okay. Thank you so much, Anushi, for breaking that down for us. Well, Sudeep, I'll come to you with this one. The management is pretty confident when it comes to the guidance of, booking growth, which is roughly 20 to 25%. However, the debt is a little higher. But your view as to how Prestige Estates looks to you fundamentally?
I think, they're doing the QIP to reduce, amongst others, debt. So I don't think debt will be a problem with more money coming into the company. As far as the fundamentals of the business is concerned, I think the demand is robust and it's likely to remain robust. So under the circumstances, I think operational execution
of Prime Minister Narendra Modi, the bold vision of Viksit Bharat 2047 is taking shape. Through transformative initiatives, we are building a future to a stronger, more prosperous India. In just a decade, India's maritime sector has ranked as the 16th largest maritime nation. The port capacity and coastal cargo has almost doubled. The number of seafarers has increased 1.5 times. And cargo through national waterways has increased by more than 1,800%. But this is only the beginning. With the Honorable Prime Minister's empowering Amrit Kal Vision 2047, we are now charting a course towards even brighter horizons.
हम यहाँ के पोर्ट्स की कैपेसिटी को बढ़ाने पर काम कर रहे हैं, पोर्ट इंफ्रास्ट्रक्चर पर निवेश कर रहे हैं, सागरमाला परियोजना के तहत पोर्ट्स की कनेक्टिविटी बढ़ाई जा रही है.
With an investment of 80 lakh crore rupees, the Amrit Kal Vision 2047 will shape world-class ports with over 300 initiatives. India has now set its sights to expand capacity, lead globally and build a sustainable world-class maritime sector. Now to truly expand India's canvas in line with Prime Minister Modi's visionary leadership and the bold directives of the Ministry of Ports, Shipping and Waterways, India's next monumental leap in maritime excellence. Presenting the Vadhavan Mega Port of the 21st century. Strategically located just 150 kilometers from Mumbai, the Vadhavan Mega Port is set to be completed in 2 transformative phases, which will provide state-of-the-art facilities with unmatched capabilities. By the end of its second phase, the Vadhavan Mega Port will handle an astounding 23.2 million TEUs. It will drive employment and empower communities by creating more than 12 lakh direct jobs and over 1 crore indirect jobs. Dedicated freight corridors, DFCs, will ensure faster, more efficient connectivity nationwide. And its location will provide direct connectivity to INSTC and IMEEC. Vadhavan is set to contribute over 1% to Maharashtra's GDP, aligning seamlessly with the state's trillion-dollar vision for growth and prosperity. From the beginning, Vadhavan was conceived as a green port. It balances economic growth with environmental stewardship in support of India's blue economy. The port will spur economic and social development of the coastal communities and the entire region of Maharashtra. Guided by the visionary leadership of Honorable Prime Minister Narendra Modi, the Vadhavan Mega Port reflects his relentless drive for a Viksit Bharat. Welcome to the Vadhavan Mega Port, where India's maritime journey is just beginning.
और अब विभिन्न मत्स्य पालन परियोजनाएं तथा मछली पकड़ने वाले जहाजों पर पोत संचार एवं सहायता प्रणाली ट्रांसपॉन्डर्स के बारे में फिल्म्स चलेंगी. मैं आपका ध्यान फिर से एक बार स्क्रीन की तरफ.
Those are live visuals of Prime Minister Narendra Modi laying the foundation stone for the Vadhavan port in Maharashtra. Of course, plenty happening with regard to announcements coming both from the GFF as well as from this particular laying of the stone. 76,000 crore is what is going to be invested in the Vadhavan port. But let me go back to Sudeep. Sudeep, apologies for that. We had to cut across. Talk to us. You were telling us about Prestige Estates in particular, but also the entire realty pack. There's been plenty of buzz. It's done so very, very well over the last 3 to 4 years. Can the kind of gains that are being clocked in sustain?
Couple of things. I think let's divide the entire real estate pack into northern, western, and southern players. I think the southern players, particularly in the office realty space, they are witnessing a major boom, and this is on the back of the entire GCC, upswing. We are, watching massive, development as far as GCCs are concerned. New companies are setting up GCCs across the entire southern part of India. In particular, they are in certain western, states as well. But Bangalore, Hyderabad, Coimbatore and Chennai, these are the areas where major GCC are being set up, and that is leading to significant quality commercial real estate demand, which is being met by some of these developers we were talking about. And I think that demand is real and that demand is going to stay. So the commercial space has become very, very attractive as far as commercial realty has become attractive as far as southern builders are concerned. Of course, residential demand continues, and that is likely to continue. And that nature of that is pretty much same whether it's West Indian developers or a Northern Indian developer or a Southern Indian developer. I think across the country there is demand for residential real estate. In case of southern part of India, incremental excitement is on commercial real estate, which is, I think, helping these real estate players down south. But coming to the market, I think there are some real estate companies which we do like, and we believe that they are good for long term. One is Godrej Realty. I think that's one stock which can be picked up even at current level for a long term hold. I think the captive land bank which they have, plus the joint venture strategy with which they are progressing ahead, should take them to different levels going forward. But we have to give time, and we have to remember that the valuation is not cheap of any of the real estate companies at this stage.
Right. So Godrej Realty remains your pick for a long-term perspective. Jay, I also come to you for Prestige Estate as well as the entire realty pack as to what looks good to you on the charts, because Prestige Estate has almost had a return of 52% YTD, and so has a lot of these realty stocks. So your view on the entire space?
Yeah, the entire realty space is an avoid for me. If you see the charts for the Nifty Real Estate Index, it's clocking a series of lower lows and lower highs. And I pointed this out in June and July that the realty index is starting to look a bit exhausted. The long term is still bullish, but you might see a sizable short to medium term correction. Watch 980 on the Nifty, 980 odds on the Nifty Realty Index. That might get taken out. It will point to a sizable medium term correction. Prestige Estates in particular, that sort of looks okay, but it's still doubt if it will get back one more time to record highs. Caution here, if you're bullish here, maintain the stop loss of about 1600. But I would go with the uniformity of what the Nifty Real Estate is pointing out. The entire sector is to be avoided for fresh longs.
So from a technical perspective, you remain cautious with respect to the realty space. But, with that, let's take a quick break. On the other side, we get you the top buy, today sell, tomorrow picks, and the latest from the derivative markets as well. Stay tuned.
Welcome back. You're watching India Market Close here on NDTV Profit. As always, we have Agam standing by to break down the FNO cues for today. Agam, extremely resilient market we've seen all through the week. We clocked 25,000 at the start of the week. It continues to be very, very resilient. Talk to us about what the FNO data is indicating.
Well, resilience is always good news, especially when you have the resilience as new life high. And we're looking at a new series, naturally, where we will be seeing a little bit more position being built. And let's take a look, start by taking a look at the future space. Naturally, we will see an uptick in the futures here, about 6% added in open interest, even as the Nifty, while potentially looks to close about 25,200. And also perhaps the highest it has ever closed. And coming down to the Bank Nifty too, well, we're looking at about a 1.5% uptick as far as its open interest is concerned. But as long as we are continuing to see strength build in the Bank Nifty too, because that perhaps will see a little bit of come through as far as your advances go. But Hersh, if I'm not certain, maybe you want to cut across to the Prime Minister at the moment.
तुमच्या या सेवकाचा नमस्कार. साथियों, आज इस कार्यक्रम की चर्चा करने से पहले मैं अपने हृदय के भावों को व्यक्त करना चाहता हूं. जब 2013 में भारतीय जनता पार्टी ने मुझे प्रधानमंत्री पद के उम्मीदवार के रूप में निश्चित किया, तो मैंने सबसे पहला काम किया था रायगढ़ के किले पर जाकर के छत्रपति शिवाजी महाराज की समाधि के सामने बैठ करके प्रार्थना की थी. एक भक्त अपने आराध्य देव को जिस प्रकार से प्रार्थना करता है, उसे भक्ति भाव से आशीर्वाद लेकर के मैंने राष्ट्र सेवा की एक नई यात्रा का आरंभ किया था. पिछले दिनों सिंधुदुर्ग में जो हुआ, मेरे लिए, मेरे सभी साथियों के लिए छत्रपति शिवाजी महाराज ये सिर्फ नाम नहीं है. हमारे लिए छत्रपति शिवाजी महाराज ये सिर्फ राजा महाराजा राजपुरुष मात्र नहीं है. हमारे लिए छत्रपति शिवाजी महाराज आराध्य देव है. और मैं आज सर झुका करके मेरे आराध्य देव छत्रपति शिवाजी महाराज की उनके चरणों में मस्तक रख के माफी मांगता हूं.
Well, that's the Prime Minister speaking live. But, let's quickly look at a couple of stocks which have been on a tear today. Let's pull up something like a Patel Engineering. The stock doing very, very well after it signed an MOU with RVNL to collaborate on hydro and other infra projects in India and overseas. So that one in focus, 6% higher. RVNL on the back of a new order win, as well as this collaboration with Patel Engineering also trending and trading higher. The order win quite small in relative terms. RVNL has an order book of around 1.3 lakh crore. The order win is just about 200 crore. But nonetheless, the stock doing very well in trade today. Sudeep, let me come across to you for both of these. Railway counters in general, Sudeep, the view seems to come in that they're slightly on the expensive side of things. The best way in your mind to play railway, that's for the first part of my question. The other piece is, what do you make of Patel Engineering or any other infra play as an alternative to railway? What's the best way to play this?
Well, as far as railway stocks are concerned, Harsh, they are very expensive, not bit expensive, and one needs to be extremely careful. Take the case of RVNL. I think, the order book, as you mentioned, is about 1 lakh crore plus. But the question is execution. Accumulating order doesn't automatically give you, much joy as far as the shareholders' point of view is concerned. We can keep looking at, these kind of prices and feel happy. But the reality is execution has not been anything great. Look at the first quarter results of RVNL. It hasn't been anything to write home about. There are a whole lot of uncertainties as far as performance on the execution is concerned. So I don't think I will, rush to buy RVNL or some of the other expensive railway stocks. There's absolutely no doubt that massive amount of work is going on in the area of rail. I think we have never ever seen this kind of concerted effort for improving the entire railway infrastructure. And it's a great opportunity for these companies to perform and to deliver results. But I think it's a little too early. And the prices have already reached a level where pretty much all the good news and the future good news also is factored in. So I think I'll be careful. As far as the engineering stocks are concerned, take the case of Patel Engineering. I think it's a very good stock. I've been kind of recommending this stock to investors. We have a target of about $90. I think it is in the right area. They are working on the hydro part of engineering. They're working on irrigation. They're working on water-related, all kind of engineering work. And I think, as we know, I think the government's focus is on irrigation, is on hydro, is on a whole lot of other water-related projects. So there's a significant tailwind behind Patel Engineering. Performance has improved. Execution efficiency is improving. They have moved out and are moving out of unrelated assets. They have some land which they're in the process of selling. Certain arbitrations are expected to give them a good award in the near future. So I think it's always better to play through these engineering companies which are already have a demonstrated track record of performance and are doing well and have moved out of unrelated diversifications.
Right. Okay. So that's the view coming in from Sudeep. We also have news pouring in, flashing at the bottom of your screen. We have Adani Ports, which have acquired an 80% stake in global offshore support vessels operator Astro for $185 million, which is roughly 1,500 crore rupees. And the acquisition implies an enterprise value of roughly $235 million. It's expected to be value accretive from the first year itself. So right off the bat, value accretion likely of this acquisition. That's, of course, Adani Ports news trickling through. But let me go across to Jay. Jay, with regard to the couple of questions I went to Sudeep on, especially on something like an RVNL, the move has been so solid. How is it looking on charts?
Yeah, the railway space is splintered for me. Some of them look like unfinished up moves. For example, RVNL and Railtel, they look like they have upsides to work with. But when it comes to something like an Ircon, it's definitely an avoid, probably due for a medium-term correction. So you might want to, if you're going to be bullish here, choose wisely and allocate much lower than your usual allocation size. That's the way to go about it. It's not, you can't paint the whole sector with one brush. Some of them are looking quite weakish, and some of them are looking like the final leg of the up move that's pending. So you might want to either let that go or participate in a very small fashion.
Right. Aviation stocks are also in focus. SpiceJet has placed 150 cabin crew members on a temporary 3-month furlough. And the DGCA has also announced increased spot checks and night surveillance on the airline to ensure safety. Now, yesterday also, SpiceJet passengers were denied boarding the Dubai airport. We also saw the recent news on the Vistara merger update, where they've now received a nod from the government of India for the merger. And in terms of the timeline, well, they had received all all sorts of merger since the merger announcement in November 2022. Now, no Vistara flight bookings will take place from 3rd of September for travel on or after November 12th, 2024. So all of these bookings will now be routed and redirected to the Air India website. So, and yesterday also we had Indigo in focus after the block deal, where promoters are selling stake in Interglobe Aviation constantly. Sudeep, I'll come to you. Your perspective of the two aviation stocks, both Indigo as well as SpiceJet.
Well, I think SpiceJet is having a lot of trouble, so it's better to avoid SpiceJet. I mean, unless you're a really aggressive investor and you want to take a punt on its recovery, you can look at SpiceJet. Otherwise, it's definitely an avoid. As far as Indigo is concerned, I think they're ticking all the right boxes. The promoter is an exiting promoter, and his selling the stock is good. Actually, the overhang, once he is exhausted selling the stock, I think the overhang will be over from this counter, and that's a good thing to happen, because we all know, and it's a declared a policy of the exiting promoter, Mr. Rakesh Gangwal, that he'll exit the counter and sell. So whenever the window is opening, he's selling. So that's one part. But otherwise, they're ticking all the right boxes. The performance has been fantastic in the market. And operationally also, they're doing very well. They're the leading airline in the country. Their international expansion is happening at rapid pace. Aviation turbine fuel, which is a major part of the running cost of airline, I think that's under control, with global oil prices remaining range bound. I think all these things are looking good. Festive season is coming in, and I think the load factor will further move up. So Interglobe is absolutely on the right side. But having said that, I will also advise that one needs to be a little careful about the valuation. It is not a cheap stock. The margin of error also is very, very limited. And an airline stock at this kind of valuation, I will advise caution. So as far as this entire airline pack is concerned, though Interglobe is doing very well, I'll advise and avoid. So overall, it's an avoid for me.
All right. So an avoid from a fundamental perspective on aviation, pretty much both aviation stocks. Thanks for that, Sudeep. Let's talk about, in fact, the most expensive, talking about expensive stocks, the most expensive listed stocks in Indian markets. Varsha has compiled this list. Varsha.
Well, thanks Hersh for that. So yes, we are speaking about India's most expensive listed stocks. Now, well, some of the stocks are expensive because in last few quarters the profit have not been good. So due to lower growth in profits, we are seeing this high PE for these stocks. Market always bakes in for future predictions. So actually street is expecting good growth from these companies over the years, and this is the reason we are seeing, that we are seeing these stocks trading at an expensive valuation. Starting with Nykaa. So Nykaa is beauty and personal care platform. If you see the CAGR growth in last 3 years, revenue has grown around 38%, but there has been degrowth in profit of almost 19% in last 3 years. In a CAGR terms, this is because in FY23, company had lower profits. While if you see forward PE, this company is trading at a forward PE of 234x. Forget actual PE or current PE, which is in 4-digit numbers. Then if you see the focus area for Nykaa, so the focus area is prestige fragrance, where they have to gain market share, and the current market share stands around almost 13%, which they want to take to 19% by FY25. Then next we have PB Fintech, known as a Policy Bazaar. If you see their financial trends in last 3 years, company has grown 57% on a CAGR basis, while profit has grown 33%. If you see forward PE, now when I say forward PE basis FY25, it's trading at 134x, and they are aiming for deeper penetration into small Indian cities and towns, and also international as well. Then we have Zomato, again an online food trading platform. If you see CAGR growth in last 3 years, 82% growth in revenue, pretty good, 34% growth in profit, and they want to maintain 20% of growth in next, in near term, and they are focusing on enhancing their margins. Then if you see, we have Trent again engaged in retailing of apparels and footwear. So if you see, in last 3 years, they've shown revenue CAGR of almost 68%, profit CAGR of 101%, and they want to sustain this growth. And then lastly, we have Adani Green, which is a holding company for all the renewable portfolio that they have. In last 3 years, revenue has grown 43%, profit has grown 68%. If you see forward P, they are trading at 94x FY25 P. Well, if you see the outlook, what they are expecting is they are targeting total renewable energy portfolio around 50 gigawatt by 2030, out of which 70% is targeted towards solar, and they are aiming for 15% capacity in merchant and C&I projects. So these are all the stocks which are, as of expensive as of today.
Right, thanks so much for that, Varsha. Expensive, Sudeep, but do you expect value?
Well, Trent, definitely. And, I think the way they have been beating market expectations quarter on quarter consistently, I think is quite commendable. The Zudio, the range has given them a completely different dimension to the entire business. And they're rapidly expanding. I understand they're opening up Zudio branded stores in West Asia as well. And apart from that, in India, they are now focusing on food and grocery retail through their Star Bazaar chain of food and grocery retail stores, which is now being expanded. So I think, and remember, food and grocery is the largest segment of consumer retail. So now this is a segment which they're focusing on. They already have a brand, they already have stores, but they are expanding and they're looking at this in a big way. So I think there is a significant scope. So Trent definitely can be looked at.
Right.
Valuation, of course, is rich, and you need to be a little aggressive to buy into Trent at these levels. As far as the other stocks are concerned, both Nykaa and PB Fintech are good. They're in good business. They're doing well, but the valuation is too rich. And I will prefer to look at them when there is a bit of correction.
Got it. Thanks for that, Sudeep. Jay, let me quickly take it to you for BTST ideas.
Yeah, I'm going with the strongest sector. Within that, I like Dr. Reddy's. I'm anticipating a fresh 52-week high to come through for the stock. A stop loss at about 7,003. The current price is about 7,030. So it's probably likely to clock fresh 52 weeks. There's a slightly, scandalous idea. It's a short today and buyback tomorrow, but only probe quantities. Reliance probably has had its, euphoria after the AGM done. It's a stop loss at about 3,100. It's probably dropping to 2,700 in the short term, but it's only a corrective drop. But looks like an attractive short for me. But only probe quantity, don't go too aggressive.
All right. Sugar stocks are rallying, and this is after government's announcement of no cap on sugar diversion for ethanol. To give us more details on this, Varsha is joining in. Varsha, tell us more about why sugar stocks are rallying.
Thanks, Mahima, for that. So yes, Dalmia Bharat, Bajaj Hindustan Sugar, Triveni Engineering, and many more. All the sugar stocks that you're seeing are up over 10% in trade today. Now, why? Because government has put no cap on sugar diversion for ethanol. Earlier, the cap was 24 lakh metric tons in ethanol supply year 2023-24. This means that government has removed the limit on how much sugar can be used to make ethanol. Now, through this, company will be able to generate more revenue and margin because more ethanol can be produced without any cap. Ethanol blending, the government has set a target for ethanol blending to take to 20% in next 2 years from 13% currently. And this new policy also allows the use of B heavy and C heavy molasses for ethanol production. Also, to prevent disruption in domestic sugar availability, the Department of Food and Public Distribution and Ministry of Petroleum and Natural Gas will work together to monitor and review the diversion of sugar for ethanol production. Lastly, if you see, this policy change is part of the government's ongoing effort to increase ethanol production and promote sustainable energy practices. DAM Capital is though bullish on Balrampur Chini, Triveni Engineering, Dalmia Sugar, but bearish on Dwarikesh.
Right, thanks so much. Sudeep, let me come to you. Pricing, of course, in focus, but any preferences within the sugar space, and is it attractive?
It is attractive from a long-term point of view. I think that's this entire ethanol blending policy, which has been coming out in bits and pieces. over the last 6-8 months, I think has been a boon for this entire industry. And this is a game changer for a long term to come. It's a structural change, and it's for the better for the industry. So Balrampur Chini definitely looks good. One can look at EID Parry as well.
Okay, Jay, let me come across to you. Some of these stocks really seeing good traction in trade today. Wager a trade for next week, if at all, upside, downside?
Yeah, if you look at the international sugar level prices, it's bottomed at about 17 odds and change. It looks like there's a sizable counter-trend rally for the medium term. So I'm anticipating somewhere about 24 cents, somewhere about 4 to 6 weeks time frame. So there might be a considerable bit of short-term rally due for most of the sugar names. I like Sri Renuka Sugars, but I'm waiting for it to break out above 53. If it try to break out above 53, it'll form an inverse head and shoulders reversal pattern, and that will take the stock to a big level. So watch out for Sri Renuka Sugars above 53. I'm anticipating the stock to hit some fresh 52-week highs past 68 if 53 is crossed.
All right, Jay, quick take on Paytm. Stock up 12.5% now as we speak. Very quick take.
Yeah, I've seen the stock, and it's put in a reasonable bottom, but the medium to long term is not that attractive. Probably it can rally somewhere to about 910. That's quite a bit of upside even from current levels. But it's a bit of a dangerous stock. But if you are aggressive, maintain a stop loss of about 506.
Sudeep, Paytm, just a yes or a no?
No.
Okay, taken. Okay, fine. Let's quickly go across to close. Thank you, Sudeep. Thank you, Jay. It's been fun. It's been good having you and having your views. But let's quickly go across, see where markets are closing the week off. We've had a solid week. We've clocked 3 to 4 highs through the week. And it's, of course, a day where we've gained 100 points and we've traded in a very, very tight band. We're closing very close to all-time highs. We're at 25,252. Very interesting. We'll have to wait and watch whether we do close again at another high, which will be a key positive and will probably drive markets further next week if we were to. Let's quickly look at the contributors on the Nifty 50. The top ones at least. There you go. ICICI Bank suddenly emerging from the pack out of the blue. Infy, TCS, which weren't present at the start of this show, have now started to show up on the top 4 contributors on the Nifty 50, and that seems like IT is starting to take a bit of a lead here in terms of driving markets higher. What's not doing well? HDFC and RIL, the two stocks which were actually the top 2 contributors on the Nifty 50, are sitting at the bottom now. So it's while markets have been very resilient, that's a tale of 2 separate themes which are playing out, where the large caps which are in the lead have now tapered off and are sitting at the bottom. So well, ICICI Bank up 1% or thereabouts. We've closed for the day, for the week as well, and we are seeing good traction across the board. At least that's what we've seen through the day. Let's pull up the top gainers. Cipla, Bajaj Finance, M&M. Bajaj Finance, second consecutive day, 2% plus in terms of gains. M&M takes home 2% as well. Need to wait and watch for auto sales, how that plays out. But at least at the moment, we've seen M&M gain 2% in trade at close today. Where are we on the Nifty? Well, 25,247 is what I see on my screen on the Nifty 50. That's where we've closed in at. We're seeing the Nifty Bank. We've seen the Nifty Bank up around 1/3%. Nifty Auto doing well as well, 0.7 odd percent higher. The Nifty IT, if we can have the intraday chart on the Nifty IT, because I think that will be an interesting one. 0.5% higher on the Nifty IT. I believe we would have closed very close to the top. There you go. And that's what really has struck out to me, at least. The Nifty Pharma off the day's highs, 1.5 odd percent higher, but has traded very well, given good support through the day. And Nifty Realty up 1.7 odd percent. So it's been a very good day overall. There are no sectoral indices in the red, which is a positive, except Nifty Media, of course.
Absolutely. And in terms of the broader markets, if we see, while the benchmarks have remained resilient, broader markets have clearly outperformed today, and they've sustained the gain throughout the day. If we see, the mid-cap 150 is up around 0.8%, the small-cap 250 is up around 0.5%. And if we can also pull up the BSE 500 and see what are the stocks that have contributed to this kind of gain. Paytm, although the fund view is that a no on Paytm, but the stock is up 12.5%. There's Jindal Stainless up around 7%. Radico Khaitan being a distillery on the back of the sugar news update up around 7%. AU Small up around 7% on the back of a block deal. But let's also quickly pull up the weekly chart for Nifty 50 as well as the mid-cap 150. There you go. It's been up around 0.3%, and as you rightly mentioned, it opened above the 25,000 mark, and it just sustained the 25,000 mark throughout. And mid-cap 150 is up around 0.8% throughout the week. But with that, we're completely out of time on this edition of the India Market Close. Thanks for tuning in. Join us again for more market insights and updates. Until the next time, have a great evening.